Good morning, everybody. In today's webinar, we are going to discuss 1 minute. Give me allow me 1 minute. Yeah, good morning, everybody. In today's webinar, we are going to discuss regarding the corporate guarantee and the valuation of the corporate guarantee. As you already know, there were some circulars issued and which clarify various issues regarding the valuations of the corporate guarantee. That's we will be discussing these all kind of issue and what clarification department has issue in regard of that, and we will be discussing step by step. And for as of now, first let me share my screens to understand what is the corporate guarantee. Yeah, what is a corporate guarantee? First of all, we will understand the meaning of the corporate guarantee in a general parlance. What do you mean by the corporate guarantee? Corporate guarantee is basically the promise or the commitment that is made by the one private limited to the another to meet the financial obligations of a third person in case of any default. This is the definition of the corporate guarantee that we use in the common parlance. Let me take some example. A Limited provide the guarantee to the bank or the financial institutions on the behalf of B Limited that if B is not able to meet his obligations or the promise on the due date, then A Limited will reimburse or will meet that obligation that the B Limited was supposed to incur. It is a commitment provided by the A Limited to the bank on the behalf of B Limited that is commonly used for the banking and financial sector as of now. And if we talk about the GST Act, nowhere is defined regarding the corporate guarantee, but the definition of the corporate guarantee has been mentioned under Section 126 of Indian Contract Act, which define corporate guarantee as a contract to perform the promise or discharge the liability of a third person in case of his default. This is an obligations or the promise to the persons to meet that obligations or commitment only and only in case of default. This is kind of guarantee. Primary responsibility will be of the third person on whose behalf guarantee is provided. But in case of default, the person who is providing the guarantee will be responsible. This is the basic concept and this is the basic definition of the corporate guarantee to understand the meaning of that. For as of now, there are a lot of group companies in which what happened, their main holding company provide the guarantee to the bank on the behalf of the subsidiaries company. This is commonly used in the corporate sector, this kind of structures. So let's discuss the corporate guarantee between the related party that is commonly used everywhere. Let us suppose A Limited is a holding company. Holding company might be in India or might be in outside India. They are having four subsidiaries: B Limited, C Limited, D and E Limited. E Limited approached the bank for the loan. Bank provide the loan to the E Limited basis. E Limited provide the guarantee to the bank in case A Limited is not able to meet his promise or discharge his liability on due timeline. It might be principal amount or it might be interest amount. That's depend upon the term and conditions of the contract. Then A Limited will reimburse to the bank when E Limited make any kind of default. The first provision regarding to the corporate guarantee has been discussed in the 53rd GST Council meeting dated June 22, 2014. In GST Council meeting, they said they are going to amend the valuations. They are amend to rule number 28. Rule number 28 talk about the value of the goods or supply by between the related person or between the distinct persons. Rule 28 basically talk about the valuation of supply of goods or services between related party or between the distinct person. If we related party is fine and it's covered the distinct person as well. What is distinct person? Distinct person, if we talk about, has been defined under section 25 of the CGST Act. That is a person who is required to take the GST registrations in multiple states or within the multiple registrations within the same state or the union territory, that is called in distinct persons of that entities. Any kind of transactions that happen between related party or distinct persons, the valuations of supply of goods or services between that persons are governed by rule number 28. In 53rd GST Council meeting, gone yes, and GST Council recommendations said that we are going to amend the Rule 28 regarding the valuation of the corporate guarantee that is provided by the companies to the banking or the financial institutions on the behalf of the related party, but they also clarify that they are not going to provide the valuation provision, but recipient is outside India and recipient is eligible to take the input tax credit. That first concept of valuation of corporate guarantee was discussed in the 53rd GST Council meeting. And in 53rd GST Council meeting, they have also provided the recommendations that they are going to amend the valuation of the corporate guarantee with retrospective effect. Not from prospective effect, they will be going to amend it with retrospective effect. That was discussed, that was the recommendations of the 53rd GST Council meeting. Basis that notification and the circular has come into the pictures that we will be discussing later on. First, we will be discussing notification and circulars has come from effective from 26th October 2023 regarding the valuation of corporate guarantee between the related parties. But the question is that what is the positions before 26th of October 2023? It is very important imperative for us to understand before scenario and post scenario. First, we will be discussing what was the scenario before 26th of October 2023. Before 26th of October 2023, corporate guarantee was considered as a supply. How it is considered as a supply? It is considered as a supply by virtue of Schedule 1, entry number 2. Schedule 1, entry number 2 talks about the value, talks about that transactions between the related party even if they are made without the considerations, will be considered as a supply. That is mentioned under schedule number 1, entry number 2. This is that we can say supply of corporate guarantee between related party is treated as a supply since the implementation of the GST. So there is no doubt, no questions that corporate guarantee is considered as a between the supply of services of corporate guarantee between the related party will be considered as a supply since the implementation of the GST. And regarding the valuation of the corporate guarantee, till 26th of October 2023, there was no separate rule regarding the valuations, but they were covered under the general provisions of the valuation of transactions between the related party under CGST Act. What was that rule? That rule, they are governed by Rule 28, Sub Rule 1 of CGST Rule 2017. That talks about the value of supply of goods or services between the related parties will be considered basis an open market value. That will be an open market value. Although separate rule note was there, but they have specified under Rule 28, Sub Rule 1, general rule that is applicable for all related party transactions, that is the open market value. But if the recipient is eligible, if recipient is able to take the input tax credit, then whatever value is taken by the supplier and value mentioned in the invoice will be considered as the value of the supply of in respect of the corporate guarantee. It was a scenario before 26th of October 2023. So we can say, we can conclude that corporate guarantee was considered as a supply even before 26th of October 2023, and corporate guarantee was covered by the valuation provisions also White Rule 28 Sub Rule 1 of CGST Rule 2017. Now we will be discussing the circular that has been issued dated 11th July 2024, circular number 225 and notification number 12 2024 dated 10th July, which make the amendment in the Rule 28 Sub Rule 2 of CGST Rule 2017. In subsequent that notice, some clarification has also been issued regarding the valuation of the corporate guarantee. First of all, we will be discussing what was the amendment by the notification in Rule 28 Sub Rule 2. Let me read Rule 28 Sub Rule 2 first. The value of supply of services by a supplier to the recipient, the value of supply of services by the supplier to the recipient. Who is the related person? Recipient should be the related person and located in India. This is interesting, located in India. If your recipient is located outside India, that are not to be governed by Rule 28 Sub Rule 2 of the CGST rule. By way of providing the corporate guarantee, value of supply by the supplier to the recipient by way of providing the corporate guarantee to any banking company or the financial institutions on the behalf of said recipient, shall be deemed to be the 1% of the guaranteed amount per annum. Per annum was a new word that was inserted by this notification. For actual considerations, whichever is higher. This rule has considered That recipient should be located in India. If recipient is located outside India, that is quite obvious. If recipient is located outside the India, then the provision of Rule 28 sub Rule 2 would not be applicable. And this amendment also talks about that we need to capture 1% per annum of the guaranteed amount or the actual considerations, whichever is higher. There is there is one proviso under Rule 28, sub Rule 2 of CGST Rule 2017 that talks about if recipient is eligible to take the input tax credit, then whatever value has been taken by the supplier, whatever value is mentioned in the invoice, will be considered as value of supply for the corporate guarantee. It means we have to segregate the transactions under two categories. If recipient is eligible to take the input tax credit, if recipient is not eligible to take the input tax credit. If recipient is eligible to take the input tax credit, then whatever value is considered by supplier will be the final value. Otherwise, 1% of the guaranteed amount per annum for the actual consideration, whichever is higher, will be considered as a value of the corporate guarantee. This were the some amendment that has been provided by tax notifications. Next day, department has issued a circular that clarifies. This circular clearly address the clarifications regarding the taxability and the valuation of the services pertaining to the corporate guarantee. First issue, what issues are discussed under the circular? We will capture step by step. First issue is that whether the corporate guarantee issued before 26th of October 23 liable to be taxable. Quite obvious, they are liable to be taxable. It's we have already discussed in earlier because the supply between the related party, even if made without the considerations, will be considered as a supply by virtue of Schedule number 1, entry number 2, and the valuation of goods or services between the related party before 26th of October 2023 was governed by the Rule 28 Sub-Rule 1. The provision that were enacted, they clarify the valuations of the corporate guarantee between related parties will be governed by the provisions that were enacted on that time. What provision was enacted on that time? That was the Rule 28, Sub-Rule 1 of the CGST Rule 2017. That talks about supply of valuation for supply of goods or services between the related party will be as per market value. But if recipient is liable to take the input tax credit, then whatever value declared by the supplier, whatever value declared in the invoice will be considered as a final value. That the provision that exists before the 26th of October 2023, and if any corporate guarantee issued later on post 26th October 2023 and any corporate guarantee amended post 26th October 2023, then the provisions of Rule 28 sub Rule 2 of CGST will come into the picture. Issue number 2. When the corporate guarantee is provided for an amount, but loan is partially availed or either not availed, then what will be the value? Department clarify the valuation regarding the corporate guarantee is not linked with the amount, how much amount the recipient has availed, how much amount, whether he is partially availed or whether he is, in fact, he is not availed. Let me take an example. Let us suppose A Limited has provided a corporate guarantee for 10 crores, right? And for 10 crores. But on the behalf of B Limited to any bank or financial institutions. But B Limited has out of 10 CR, B Limited has taken the loan of only 5 CR. Then, what will the value of supply in regard to the corporate credit? The value of the supply will remain same 1% of the 10 crore. It will not be 1% of the 5 CR. It will be 1% of the 10 crore only. That they have clarified. Second, let's think from the perspective of the recipient. Whether recipient is eligible to take the input tax credit of full GST levied on 10 CR, or it will be eligible to take the input tax credit of the GST levied on the value of 1% of the 10 CR. Recipient is eligible to take the full input tax credit. Full input tax credit of 1% of the value of the corporate guarantee, whatever GST has been discharged on 1% of the value of the corporate guarantee. Recipient is eligible to take the full input tax credit, but recipient has to make sure while taking the input tax credit that he is fulfilling the conditions, basic conditions that has been specified under rule number 16 for availing the input tax credit. Recipient, whether recipient has availed the loan or not availed the loan, then he is eligible to take the input tax credit. The two issue that has been captured in that issue. Third issue is that when the loan is issued by the banking company or financial institutions, is taken over by the another bank or another financial institution, whether said activity fall under the services provided for issuance of corporate guarantee. No, this services not going to fall the services of the services provided by the corporate guarantee. Let me take an example. B Limited has availed the loan from A bank, and later on this loan by bank A has been transferred to the ICICI bank. And corporate guarantee, what was existed before, will remain same. Then these transactions will not fall under any services provided by way of issuance of corporate guarantee. But quite obvious, if corporate guarantee issued fresh while transferring the loan from one banking institutions to another banking institutions, or either the corporate guarantee has been removed, then provision of Rule 28 sub Rule 2 will come into the picture, and valuation of corporate guarantee will be derived by Rule 28 sub Rule 2 of CGST rule that talks about 1% of the corporate guarantee. 1% of the corporate guaranteed amount or per annum for actual considerations, whichever is higher. But please again note that if recipient is eligible to take input tax credit, then whatever amount mentioned by the supplier in the invoice, whatever amount has been taken by the supplier will be considered as a value of supply for the corporate guarantee. That was the clarification issued by the circular, quite that circular. Next issue that covered by the circular is that where the corporate guarantee is provided by more than one entity or co-guarantor, what is the amount on which GST shall be payable by each co-guarantor? Let me take an example for this as well. Let us suppose A and B has provided the guarantee for 10 CM, in which A Limited has provided the corporate guarantee for 60% of the amount, like 6 CR, and B Limited has provided the 40% of that corporate guarantee, like 4 CR. A Limited has provided the corporate guarantee for 6 CR and B Limited has provided the corporate guarantee for 4 CR. Then the value supplied by A Limited will be 1% of the 6 CR and value supplied by B Limited in respect of corporate guarantee will be 1% of the 4 CR, right? It means they have to proportionately discharge the GST on the value of corporate guarantee. Not full amount, but whatever proportion is there, they have to discharge on that only. That will be considered the proportionate value. Co-guarantor has to consider the proportionate value for the corporate guarantee. Next issue that was taken care by that circular is that in case of corporate guarantee, whether GST will be applicable under forward mechanism or reverse charge mechanism. Why not? If provider of services is outside India and recipient is in India, that will be considered as an import of services. Let me take an example. If A Limited is a holding company that is situated outside India and subsidiary company is B Limited situated in India, A company outside India providing the corporate guarantee on the behalf of B Limited to any banking or financial institutions, then the value of the corporate guarantee will be the 1% of the guaranteed amount. And in this mechanism, GST will be charged by the B Limited under the reverse charge mechanism. If A Limited holding company, in the same example, I am assuming A Limited is not based outside India. A Limited is based inside India. Is a domestic company, is an Indian company. Then A Limited will raise the invoice along with the GST and under the forward mechanism. That was the clarification issue. If guarantor is outside India, recipient is in India, then reverse charge mechanism would get attracted. If recipient and provider guarantor both are in India, then forward mechanism will come into the picture regarding the valuations of the corporate guarantee. Next issue that is captured by the circular for 24, whether the discharge of tax liability on a corporate guarantee, 1% of such guarantee offered to be done. Is it one time or is it on yearly basis or is it on month-to-month basis? They said value of the corporate guarantee, if the corporate guarantee at the beginning is provided for multiple years. Let us suppose A Limited is providing the corporate guarantee to the bank or financial institutions in the beginning for next 5 years. In the beginning itself, they clarify that they are providing the guarantee for next 5 years. If during that 5 years, any due deadline for payment or repayment of loan or interest come, if B Limited is not going to discharge, then A Limited will discharge. Then how the valuation will be derived for the corporate guarantee, value of supply for the corporate guarantee. Then 1% of the corporate guaranteed amount multiplied by the number of years for which corporate guarantee has been provided at the time of issue of corporate guarantee. In our example, we have considered 5 years. 1% of the corporate guaranteed amount into a 5 or actual considerations, whichever is higher will be the value of the corporate guarantee. But if corporate guarantee is renewed on year-to-year basis, if corporate guarantee is renewed on year-to-year basis, then the value supply for corporate guarantee will be computed on year-to-year basis. Let us suppose every year this corporate guarantee gets renewed, then 1% of the corporate guarantee amount or the actual considerations, whichever is higher, will be the value of supply in each of the 5 years. But what will happen? If the corporate guarantee is provided only for the part of year, let us suppose in our example it is for 8 months, then the value of the corporate guarantee will be 1% of the guaranteed amount into the 8 divided by 12. If it is for partial year, then still it will be proportional. If it is for multiple year, then we need to do multiplication. If it is for year to year basis, then we need to compute out on the year to year basis. That has been clarified by circular test. Next is issue whether the valuation whether the valuation specified under Rule 28 sub Rule 2, 1% of the guaranteed amount for the actual considerations, whichever is higher. If a recipient is eligible to take the input tax credit, then the value taken by the supplier will be considered as value of the corporate guarantee. Is that going to be applicable for export of services as well? No, it is not going to be applicable for export of services. If we read out the definition of export of services as specified under Section 2, subsection 6 of the IGST Act, which that if recipient of services is located outside the India, provider of services is located in India, and place of supply of services is outside the India, and payment has been received by the supplier in a foreign currency exchange or in Indian rupees, wherever permitted by the Reserve Bank of India, that will be considered as a supply. In export, recipient is outside India. In Rule 28, sub Rule 2, they specifically captured that recipient should be in India. If it is outside the India, provision of Rule 28, sub Rule 2 will not come into the picture. But if recipient is in India and provider is outside India, then definitely provision of Rule 28 sub Rule 2 will come into the picture. Next issue they capture that whether the benefit of second proviso of Rule 28 sub Rule 2 are applicable in all the instances. What is Rule 28 sub Rule 2? Rule 28 sub Rule 2 talks about that if recipient is eligible to take the input tax credit, then whatever value has been declared in the invoice will be considered as a value of the corporate guarantee, value of supply for the corporate guarantee. So it's talk if we have to segregate whether the recipient is eligible to take the input tax credit or whether recipient is not eligible to take the input tax credit. If recipient is eligible to take the input tax credit, whatever value has been captured by the supplier will be considered as final value as 1% of the corporate guarantee amount per annum for the actual considerations, whichever is higher, will be considered as a value of corporate guarantee between the related party. These are the certain issues that were captured through the valuations regarding the valuation of the corporate guarantee. But now we will be discussing it is very going to hamper for the renewable sector. It is going to much hamper to the renewable sector. Renewable sector because they are not going to they are not going eligible to take the input tax credit like they are generating the electricity through the solar power, wind power, and they are not eligible to take the input tax credit. And these corporate guarantee is commonly used in the renewable sector. Why? Because in the renewable sector, if we talk about that, they have to form different entities when they are going to set up the project across India or in different location. Due to some funding requirements and due to some investor requirement or due to some financial institutions requirement, they have to prepare the separate profit and loss account. That's why they have to create the separate SPVs. And in that happen, group company, holding company provide the guarantee to the subsidiaries company. And as per the REC limited norms, they have to maintain the debt equity ratio as well, 70 and 30%. 70% they have to take the loan from the bank or the financial institution. If subsidiary companies are going to take a loan for setting up the plants, 70% loan from bank or financial institutions to meet their capex requirement, it makes the corporate guarantee essential tools to facilitate the credit for the project development. It is very In that sector, it is very and common use the corporate guarantee come always into the picture. Renewable sector, if we talk about renewable sector, is already GST is applicable 13.8%, 12% for 70% of the total plant cost, and 18% on the 30% of the total plant cost. So if we talk about the renewable sector, already they are paying 15% of their project cost as a GST, of which they are not eligible to take the input tax credit. That is already an cost for the renewable sector, 15% of total plant cost. And apart from that, government has introduced the GST on the corporate guarantee as well. Government has introduced the GST on the lease land as well. So that is going a very critical and important issue for the renewable sector, that is going to increase their cost. Because if we talk about the lease rent, RCM on lease rent as well for residential and commercial property for both of them, then it is also an extra cost for the renewable sector because they have to acquire the land for setting up the solar power plants. So that is also a very, very big cost. For that, hence we can say there is extra cost burden in terms of GST on the renewable sectors. And some of the organizations that work as a license between the industries and the government, they are taking the recommendation of the industry and submit it to the government that this is an additional cost the government has to be prepared. Since the government actually want to boost the renewable sector, then this kind of GST should not be applicable. That is also various recommendation has been sent to the government also. Let's think how government come back. So we can say GST on the corporate guarantee is a very big factor for the renewable sector, and that to be addressed by the government on an immediate basis. In nutshell, I would like to say that there are the much awaited clarifications have been issued by the department to the circulars that clarify very, very much awaited issues regarding valuation of the corporate guarantee. And and also, the GST on the corporate guarantee is a big hit to the industry that are not availing any kind of input tax credit. They have to follow Rule 28 Sub Rule 2 because they are not availing the input tax credit. Hence, it is a very big challenge for the group companies and the companies that are not availing the input tax credit. And that was that we had discussed. And I hope everybody got regarding the corporate guarantee and the valuations of corporate guarantee and how it is impacting to the industry that are not availing the input tax credit. And I hope everybody has enjoyed and everybody has gained some knowledge regarding valuation of corporate guarantee. And now I would like to take the questions if anybody is having. Okay, no question is there. Okay, thank you everyone. Thank you.